Your roadmap to the latest in auto. Welcome to Highway Herald. As the whole EV industry hits a road bump, Volkswagen is facing one of its biggest challenges in history. Despite pouring billions into EV development, sales have completely stalled, and nothing suggests things will change anytime soon. Volkswagen can't sell EVs, the CEO is panicking, and here are 8 reasons why. Reason number 8. The surge of Chinese EV competitors. The global EV market has become highly competitive, with Chinese automakers like BYD and NIO emerging as major players. Volkswagen, once a leader in China, now faces stiff competition from these companies, who offer innovative, feature-rich, and affordably priced EVs. Chinese brands have surged ahead due to their focus on technology and cost-effectiveness, with BYD's Blade battery technology setting new standards for safety and efficiency. Supported by substantial government subsidies and policies, these manufacturers are scaling production and investing in R&D rapidly. Meanwhile, Volkswagen struggles with software issues and supply chain disruptions, making it difficult to compete. Chinese automakers are also eyeing European markets, intensifying pressure on Volkswagen, which previously dominated there. Reason number 7. Consumer hesitation and charging infrastructure woes. Volkswagen faces a major hurdle with consumer reluctance to fully adopt electric vehicles. Despite growing environmental awareness, many are hesitant to switch from internal combustion engine (ICE) vehicles due to concerns about range, reliability, and overall cost. A key issue is the limited availability and reliability of charging infrastructure, particularly in rural areas, fueling range anxiety among potential buyers. Inconsistent charging station performance and compatibility issues also add to the problem. Additionally, the higher upfront cost of EVs, despite lower operational and maintenance costs, remains a barrier. Reductions or eliminations of incentives can further impact sales. To address these challenges, Volkswagen must invest in expanding and improving charging infrastructure, work with governments and private entities, and reduce ownership costs through technology and strategic pricing. Educating consumers on the long-term benefits of EVs could also drive adoption. Reason number 6. Persistent software glitches. EVs are vulnerable to software errors and glitches, and Volkswagen's backend is no exception. Issues with the company's new infotainment system were noticed a couple of years ago and remain unresolved, harming Volkswagen's reputation and sales. Common problems include scheduling home charging, seamless Apple CarPlay integration, long-range calculations, buggy smartphone connections, and various charging issues. The biggest issue was the unexpected reset of gauge clusters and infotainment systems, leading to temporary loss of active safety systems while driving. 2 months ago, Volkswagen recalled nearly 80,000 ID.4 models produced between 2021 and 2023 to address this. A Volkswagen official stated that the issue would be fixed by updating the infotainment module, as earlier over-the-air updates didn't work as expected. These ongoing issues continue to affect user experience and Volkswagen's market performance. Reason number 5. The shift towards plug-in hybrids. Volkswagen's ambitious electric revolution is hitting a snag. Despite being a major proponent of EVs, the company is now recalibrating its strategy. With EV sales stagnating, Volkswagen is turning to plug-in hybrids as a transitional technology. Instead of pushing an all-electric agenda, Volkswagen recognizes the continued relevance of hybrids, which are gaining popularity at an impressive rate. Hybrids are emerging as a more practical choice for many consumers, bridging the gap to an all-electric future. They offer lower costs, greater ease of use, and alleviate range and charging concerns. As a result, Volkswagen is set to integrate more plug-in hybrid powertrains into its vehicles, focusing on high-volume combustion models. This shift aligns with the broader trend of hybrid technology growth and reflects a strategic pivot in response to current market dynamics. Before we delve deeper, we'd appreciate it if you could subscribe to Highway Herald. Your support fuels our passion to create more content like this. Now let's explore reason number 4, stalled EV sales in the second quarter. Volkswagen was among the first legacy automakers to fully commit to electrification. However, recent data reveals that this move may not have been the wisest. EV sales stalled in the second quarter, showing a mere 0.1% year-over-year increase, suggesting a slowdown in electrification. Despite official claims of an increase in EV market share, this figure is overshadowed by a 3.8% decline in combustion vehicle sales. The outlook for Volkswagen's EV lineup includes potential production cuts and delays. For instance, the Audi Q8 e-tron may see its production end soon, and the US launch of the ID.7 has been delayed. Similarly, the Cupra Tavascan's launch in China might face setbacks. Among Volkswagen brands, Volkswagen itself has shown slight improvement, selling around 100,000 EVs in the quarter, a 6% year-over-year increase. In contrast, Porsche has seen a dramatic 48% decline, while Skoda is down 18% year-over-year. Reason number 3. Volkswagen falling behind in the EV race. In 2019, Volkswagen aimed to surpass Tesla and become the global leader in EVs, investing heavily in its own battery technology and production. However, today, Volkswagen trails Tesla significantly in EV sales, especially in North America, and faces intense competition from Chinese EV manufacturers like BYD and NIO. Once dominant in China, Volkswagen is now struggling as local rivals set new standards with advanced tech and quick development cycles. Despite the overall EV market in China growing by 25%, Volkswagen sales are expected to drop by 7%. This shift has led UBS to downgrade Volkswagen's stock from neutral to sell. The challenge isn't limited to China. It could also affect Volkswagen's stronghold in Europe, leaving its future as a leading global EV maker uncertain. Reason number 2. Audi's sales slump may lead to plant closure. Recent issues have cast doubt on Audi's EV program. Despite heavy investment, demand for Audi's electric models, including the Q8 e-tron, has fallen short. This has led Audi to consider closing its Brussels plant, crucial for EV production since 2018. The Brussels plant, operational since 1948, faced temporary closure earlier this year due to supply chain problems. With profits down 20% and potential production halts, the plant's future is uncertain. Closing it would be a significant setback for Volkswagen, reminiscent of the closure of its Pennsylvania plant 36 years ago. The financial impact of closing the Brussels plant is substantial, with retooling costs estimated at $2.8 billion. Volkswagen and Porsche have both revised their earnings forecasts downward, and the plant's closure would affect about 3,000 employees. Reason number 1. Significant decline in European market. Volkswagen, as the world's second-largest automaker, has traditionally enjoyed strong performance in its home market of Europe. However, the EV segment in Europe is currently experiencing a downturn. The market share of EVs in Europe has dropped from 14.16% in 2023 to 12% this year. Additionally, less than 30% of Europeans now plan to purchase an EV. The reduction in government subsidies for EVs, which ended in Germany last December, is likely contributing to the diminished interest in electric vehicles. Volkswagen has seen a dramatic 24.3% drop in EV sales compared to the previous year. While other brands within the Volkswagen Group have fared somewhat better, the overall trend is concerning. Notably, BMW has achieved significant growth, reaching the milestone of 1 million EV sales earlier this year. As Volkswagen grapples with these challenges, it's crucial for the company to reassess its strategies and adapt to the evolving market conditions. Thanks for watching. Be sure to subscribe to Highway Herald to stay updated on the latest vehicle news and upcoming videos. See you next time.